Welcome to the channel. Welcome back to another video, guys. On this quick live, I want to have a conversation about my specific, and when I say my specific, I mean my specific portfolio. Give me a thumbs up as you come in here, guys, and let me know that you can hear me okay. Just a quick thumbs up in the chat would be great for me to let me know that you can hear me. And let's jump into it. Let's talk. Let's have a conversation. First live of the new year 2025. Thanks, Steve. I appreciate that. First live of 2025, talking about my personal portfolio. What do I own in my portfolio? I want to share that with you guys on this video. And if you get anything out of it, hit that like button as you come in. Just tap it one time, smash the like button. There's no particular rhyme or reason for today's live. It's just I want to share and reveal sort of what my entire portfolio of investments are and talk about some potential changes coming up here in 2025. And if you enjoy what I'm talking about and you're not a subscriber to the channel, please consider subscribing to the channel and leave a comment or leave a chat in the chat. And if you watch this on replay, leave a comment. I try to get to all the comments that come up when we're having these conversations. And I'll try to look through the chat as well, guys. If you have a question about investments or my stock portfolio or why I chose something, just let me know and we'll try to answer it. But put a Q by it. Helps if you put a Q by it in the chat. Helps me out. Helps me be able to identify it real quick. Southern California's in the house. Happy New Year to you, Steve and Mario. Is that Maria? No, that's Mario. Good wishes. Happy New Year, Sheila. Art, thanks for the thumbs up. Is in the house. Appreciate you guys being here. I just want to try to be transparent on this video. All right, just be transparent. I'm going to show you exactly what I own in terms of ETFs, in terms of individual stocks. And I'll sort of give you, I'm not going to dig too deep into the numbers and earnings reports and PE ratios. I'm not going to dig that deep. I just want to give you an idea of what I own, right? Overall. Now, let me start this whole thing off by saying this. I have a TSP with the federal government, right? Me personally, I work for the government, and I've worked for the government for 22 years, almost 23 years, actually. So I've been putting in towards the TSP for many, many years, right? That's a big chunk of my entire portfolio. And you say to yourself, well, you got a TSP. TSP is Thrift Savings Plan. And it's the government. If you work for the federal government here in America, it's the government's 401k, version of a 401k or version of a 403b. And it's called the Thrift Savings Plan. We shorten it by saying TSP. If there's anybody in the chat that has a TSP, let me know if you understand or have a TSP. Artemis from South Holland, Illinois. Fantastic. I got an on up there. Angela Pittman from North Carolina. Good to have you. Nigel. Good to see you, Nigel, from Winnipeg. Glad you're here. We got somebody checking in. Check the Logic from Destin, Florida. You guys have been with me for quite a while. Some of you have been coming on here for a year or two. And so I know some of your names, right? Anthony's here. Good to have you. Let's see here. Newcastle, Pennsylvania's in the house. I used to be a geography teacher, full disclosure, years ago. So I really like to know where people are from, right? Put people in certain places throughout the world. Western Nebraska's in the house. Tab, Nebraska. Good to see you again, as always. So Kara says she has a TSP. TSP. So in my TSP, I'm primarily what we call 80-20. Primarily. So I'm 80% C fund. This is me, and I'm not going to show this on the screen, but I'll just tell you this one. But I'm going to share my screen in just a moment. In the TSP, I'm about 80% in the C fund, and probably about 20% of everything I make goes towards that TSP. 20% of everything I earn on a regular basis every time I get paid, right? So we're 80% C, about 20% F and G. F and G are bond funds or government bond funds, which are sort of safe. I'm getting a little older, so I changed that. I was at 90% C, and now I'm down to about 80% of everything that I put towards my government TSP is going towards the C fund, and then 10% F, 10% G. So that's where I am on the TSP. Also, if we're talking about my entire portfolio, I also own some rental property as well. And you'll see on, if you go, I got a whole playlist on this channel with more than 100 or close to 100 videos about real estate and investing in real estate and managing real estate. So I do have a few rental properties as well. And we also have a home, a primary home as well. So I got some real estate in the portfolio, and I got a big chunk of my portfolio in the TSP, Thrift Savings Plan, which is my job's sort of like a 401k. Happy New Year to you, Mr. Rambro. RC is in the house. Carol Pitts, good to have you. Okay, so Carol Pitts, you know what I'm saying. You say you do have a TSP. So we got some government workers in here. Fantastic. R Payne and Dope Law. So we got some folks that understand and know what the TSP is. Great. If you got a TSP question, feel free to drop a Q next to it, and we can answer a question for you. Portland, Oregon's in the house. Good to have you here. Somebody said, I started out with a G fund, but changed to CS and F. Yes, you want to get out of the G fund as soon as possible, unless you're about 75 years old and you're trying to preserve everything that's in the TSP. Otherwise, I like to play it risky. That's why I'm in my early 50s, but I go ahead and put about 80%. I don't like the L funds, right? I'm not a big fan of the L funds, not a fan of international. I don't really do much international. I like to have it in C. C is the S&P 500 equivalent, just so you guys don't know that. The C is the S&P 500. There's about 5 funds plus L funds you can put it into. So that is federal government TSP. Now I want to share my screen with you, and I want to share what I do in terms of ETFs. Remember, this video is just me sharing and being open, transparent. I'm just talking off the cuff. This is not scripted or anything like that. We're just kind of all talking together about what my portfolio is, because I just want to be transparent as we start off 2025 and let you guys know what I have. Yes, please hit that thumbs up button. Mrs. Moore is in the house. Thank you for being here, Mrs. Moore. I always appreciate you as always. Somebody says the government matches 100% up to 3%, and I think it's 50% in the 4 and 5% range, but that's about it from there. Chicago's here. Good to have you here. Let's see here. Let me go ahead and share my screen real quick, and I want to talk to you about my ETFs, if I will, guys. Let's see here. Give me 2 seconds here. I'm so slow on this technology, right? I should be a lot better. All right, so let me share with you what I have in terms of ETFs, all right? My ETFs are at Vanguard. I'm just being as transparent as possible. Again, if you got a question, put a Q by it, and we'll rap about it. Walamala's in the house. What's up with you? Good to have you. Buffalo's here as well. We got somebody from London in here. Glad to have you as well. Somebody said, how should we diversify our TSP? Let me go back to TSP real quick. In terms of diversifying your TSP, depending on your age, I would be a little more risky, right? I like the 80-20 is where I'm at now, but for many years I was at 90-10, meaning 90% towards the C, so I get some equities, and 10% towards, I think I was in F, right? I don't do I only do the C. I'm not a big fan of S. S is a little more rocky. I don't like rocky. I like steady. So I like investing in the S&P 500. That's why I have most of my money in my TSP in the C fund, right? And all future in the C fund, okay? So next we go over to Vanguard. Let's rap about Vanguard real quick, guys. Give me 2 seconds. Let me pull. Oh, it's up. I got it. All right. So let's talk Vanguard. So in terms of ETFs, part of my strategy, and I'm not showing my full screen. Maybe I'll just show my full screen here. Let me see how that works out, guys. Let me see what happens here if I make this wider. Let's see. Nope, it just makes it smaller, but that's okay. We'll make it smaller. Not that small, right? All right. So let me make it a little bit bigger for you. All right. So Vanguard ETFs. Okay. This is what I look for, by the way, when I'm buying ETFs, right? These are 9 things I look for. Low expense ratio, 90-10 strategy is how I do the ETF. I'll tell you about that later. Allocation, 90% equities. I'm in large cap growth. I'm in mid cap growth. I'm in small cap value. Small cap ETFs are a little bit more volatile, so I like to have the value at the small cap because the value is less volatile. So even though I'm in small cap, higher volatility, I'm in small cap value funds ETF which is a little less of that volatility. And then I got some sector specific ETFs, and I got a little bit of bonds as well in my ETF portfolio. Now, I'll reveal exactly what they are, ticker symbols, in just a second. I look at holdings. That's number 4 on the list here. Who's in the ETF? Remember, ETFs are a bucket of funds. Who is in the ETF? What companies are in that 80 and 90 and 100% or 100 different stocks, right? That's in the bucket. I look at also certain sectors that I enjoy and like. And right now, you'll see in a second that I have I have a financial ETF and a real estate ETF. I also look at the past performance. How risky is it? I look at, again, how many stocks are in there. Holdings, meaning what companies, and number of stocks is how many stocks are in that bucket called the ETF, right? And of course, I look at the market price as well. So let me slide over just a little bit to show you what I actually own. All right, here is exactly in blue what I own today. And anything that's marked out down here is what I got rid of. So in my ETF portfolio, guys, here's what I have. Large cap growth S&P 500 index fund. So I have what they call Admiral shares of VFIAX over on Vanguard, right? And then for large cap value, I have a dividend type ETF called VYM, right? And I've done all the research, the background on all these. I'm just kind of trying to show you right now. That's kind of what this video is all about. So I have an index fund that has about 40% of my ETFs is wrapped into this one index fund that follows and tracks the S&P 500. All right. In terms of ETFs, the rest of these are ETFs, by the way. I've got about 13% of my ETF portfolio, and we've been growing this portfolio, done a few videos over on my Patreon. We started these portfolios with not much money at the beginning of last year or in middle of last year, right? And now I think this Vanguard has gone up a little bit, not very high, just about maybe, I don't know, 15K or so in here. But we've got the large cap value, VYM, but then we got mid cap growth. Remember I said we got mid cap growth, and we got VOT, we got small cap value, and we got VBR. And then we have a bond fund, which is 100% government backed bonds. It's only going to get me about 1%, but I only got about 10% of the portfolio in there. What I've done in my ETF portfolio is I've allocated it a certain way, and I've tried to get some balance in there. So this is pretty much 90% equities and about 10% bond. 90, similar to what I told you I have over at my TSP, which is 80-20, 80% equity, 20%, 10% bond over there. So if you look at the next one, sector specific, I told you I got a financial ETF called VFH, but I've only got about 5% of my portfolio in that sector specific. And then I also have a real estate that deals in a lot of REITs, VNQ, which holds a lot of shopping malls and things like that. So without me digging into all the holdings that's in each one of them, I just want to reveal this is what's in this portfolio in terms of my ETF and index funds, right? And I have a little running total of some things I've done, but one way or the other, I used to carry VUG, I used to carry VTV, I used to carry VOE and BSV and VGT being the big tech, right? But because those things are sort of covered up here, I didn't want to have a portfolio with 10 different ETFs, right? I said, let's go with about 7 ETFs. I'm sorry, 6 ETFs and 1 index fund is all I have. That is my Vanguard account, what's in there, right? Or what we're investing in over there. All right. If you guys got questions, again, put a Q by there. Let's, ask me a few questions. I'm an open book here. Yes, please hit that thumbs up button. Appreciate it, guys. Miami's in the house. Let's see here. My company offers 10% pension and a 401k. Fantastic. Got Fort Worth, Texas in the house. Good to have you here. Carol, I think we mentioned you earlier. Let's see here. Toronto, California, maybe so. Canada, Toronto, Canada. Question: what is the change that took place with Vanguard? When you say change, now I know Vanguard's had its issues since Bogle passed away. I mean, there's been some. Let me just give you a few things I don't like about Vanguard, because I can tell you a little bit. I like Vanguard. I've been there for quite a while, and But the one thing I don't like about Vanguard is their interface is just not as friendly. And I've heard some things about their customer service and so forth. But Vanguard, their interface to their actual stuff is not as it's not as user friendly as, say, if you go over to Schwab or you go to Fidelity, right? On those interfaces, it's like an eighth grader could use them very easy, right? But with Vanguard, it's a little tougher to navigate, and they've had some issues in the past couple of years with their customer service. So the specific issue, Carol, you're talking about, I'm not 100% sure. If someone else knows, put that in the chat for us, please. Carlton, thank you for that shout out, Carlton. I did a one-on-one with Carlton, and yeah, I appreciate it, man. Thank you so much for that shout out, and it was my pleasure helping you. I appreciate you entrusting me with your information. Let's see here. How do you learn about this stuff? I'm a novice to all this. Michelle, you just start reading. One thing you can do, Michelle, is just every day take a look at the stock market. Take a look at the stock market news on whoever you watch, ABC, CBS, MSNBC, Fox, whatever it could be. The Associated Press, maybe it's USA Today. But just start every day taking a look at some of this financial news that comes out. And you'll start to kind of pick up on some of these things. The other thing you can do is obviously get yourself a book. There's a great book called Stock Market 101 that's you can find on Amazon. I can't think of who the author is. It's a CPA, has a letter CPA behind. I think it's a lady, Michelle something. But just start reading. Just start listening. Just start, when you hear a term you don't understand, like I may say, hey, this ETF, Google what ETF is. This is just a bucket of stocks. And then whenever you find the definition to something you don't understand, try rearranging it in your mind to put it in your own words to say to yourself. Right? That's just a little technique that if I say, PE ratio, then you go look up what a PE ratio is, and then you try to understand it, and then you go ahead and put it in your own words and say it back to yourself or write it down in your own words. That's just a little tip, right? But it's just a matter of getting involved with it every single day. You do that for 6 months, a lot of this terminology and stuff, you'll see it, you'll begin to catch on to it. Bama in the house, just bought VYM. VYM, again, is that dividend type of ETF at Vanguard. Let's see here. Am I still? Yes. Brian, hang tight, Brian. I'm going to be talking about my individual stocks in just a moment, so bear with me. We'll talk a little PLTR, a little bit of KAVA as well. Do I think 70% dividend ETFs are a decent approach? With my ETFs, I always invest that money right back. 70% in dividend ETFs, that's not a bad approach. Dividend ETFs are typically going to be from pretty stable companies. That's a pretty safe way to go in terms of investing. I like that idea, though. $500 to start with, $125 a month. That's about what, $500 a month. So 70% dividend ETFs. Look at what okay, here's one thing I want to show you guys. I'm glad you brought that up. Gabe, let me show you guys something so you guys are really dug into this thing right here. On my screen, I'm going to show you how I look at this whole thing. Let me just kind of make this I got to make it a little bit bigger. So in this, I have a stock strategy. Let's talk about stocks real quick. So I have a whole stock strategy, and the stock strategy is based on me, right? What is the strategy? And then not only what is the strategy, let me scan over just a little bit for you. I look at some super investors, 13Fs. I do a little bit of cloning here and there, right? I don't do a lot of trading. That's not really my thing. I like to buy and hold. So in terms of individual stocks, I like to buy them and hold them and keep them and hang on to them for a while. I'm going to show you my individual stock portfolio, but I want to show you my overall plan, right? And you can do, this is just a what do you call it? A spreadsheet, right? And it's just me thinking over the course of 2 or 3 months and figuring out this plan, my risk tolerance, my long-term goals, access to capital, whatever it could be. But I write down pretty much what my strategy is. This is the strategy. And I do my investing in single stocks over at Charles Schwab, right? So I got a philosophy that's core beliefs. What do I believe about business? What do I believe about stocks and stock picking? And then what's the strategy? Is it a value thing? I look at moats. I look at the buy and hold strategy. I look at moats, meaning, what's the competitive advantage of a specific company? That's what a moat is, right? What is there, for example, to explain a moat, Think about Coca-Cola, right? If you got 2 bottles of soda sitting on a table and we're over in Japan, we're visiting Japan, and we got 2 bottles of soda on the table. One says Coca-Cola and one says Joshies, right? Joshys, or HYS, Joshies and Coca-Cola. When those 2 bottles of cola are sitting on the table, who is 90% of everybody that walks by there is going to choose Coca-Cola. They're not going to choose Joshies, because Joshies, they don't have a moat like Coca-Cola has a brand moat. Everybody knows Coca-Cola no matter where we are in the world. That's a competitive advantage for Coca-Cola, right? As a brand. So they have this brand moat, M-O-A-T. And that's the types of companies that I like to invest in. They have a moat, meaning, for example, somebody mentioned Palantir. Palantir has a moat at this point in terms of what they offer to the private sector. Same thing with NVIDIA, a moat. So I like to buy those companies that have an enduring competitive advantage, because overall, I'm a long-term investor. They're going to hold their value longer, and they're going to provide, over the long haul, steady returns, which is what I like. I don't want too much up and down. I'm 54 years old, so I don't want a lot of up and down. I want some steadiness, and that's why I do a lot of value. I like value stocks, and I like some value ETFs, right? But this is my strategy. If your strategy ain't got to look like this, you could have 5 things on your strategy that you're looking for, right? I also have, let me see if I can find my checklist real quick. So I got a little checklist as well. So my checklist is going to include business stuff, leadership stuff about the business, and it's going to talk about some financials that I like to look at and some miscellaneous. Just a simple checklist for me that I made up, right? To what I think is important when I'm buying an individual stock. So somebody asked me, I said, I'm just now starting out. Start by creating a plan and a strategy, right? And then what am I looking for? Don't just jump willy-nilly into it because you saw Joe Blow on TV talking about, Open Door. You saw him talking about the company called Open Door, and you're like, oh man, Open Door, let me go buy some Open Door. Does Open Door fit with your investing strategy? If it doesn't, don't do it. If it does, go with it, right? So this is kind of what I look for when I look for individual stocks. And I'm going to show you the individual stocks that I have in just a moment here. West Palm Beach, Florida, Northern California. You got a question, put a Q by it. Somebody said, Sonia said, should we invest in a life cycle with TSP? I'm not a life cycle fund person. A life cycle stock with the TSP, so you guys don't know, that may not know, is it means they automatically shift and move what you're investing in as you age, as you get older. And as you get older, they get more conservative. And that's for a person that really wants to be super duper hands off, right? And for me personally, I don't like life cycle because I want to have a say in what I'm investing in. And just because I'm 55, 60 years old doesn't mean I want to have 60% of all my money going to bonds, right? Now, some people are different, right? Some people are totally different and they like L funds or the life cycle funds. And that's cool, right? It depends on what you like and what you want to do. Again, it's all about these individual choices in terms of stocks and ETFs and your strategy and all that stuff. It's as individual as we are individual, right? So what Kay likes, I may not like. What Mike enjoys and what his comfort level and his risk tolerance, totally different from mine, right? Somebody said, what's the difference between VB and VBR? I think VB is an index fund and VBR is the ETF. I think that's the only difference there. If I'm saying that right, if I'm not saying that right, somebody help me out. But I think VB is the index fund, VBR is the ETF. Somebody said Fidelity has a great interface. I really like Schwab's interface myself. So let's see here. Also have Fidelity will continue. Boom, boom, boom. Just see if there's any more questions, cues that jump out. Am I worried about the 5% dip in the last month? No, I don't worry about, because I'm a long-term investor. So I don't really worry about it, right? Sure, I want to start tapping into my funds in 5 or 10 years, but for the most part, guys, it's long-term. The money I tap in, I probably won't tap into all my money. And so my point is, I like it when I see stocks go down a little bit, just a little bit, right? Because it gives me an opportunity to buy more at a cheap price. So in order to be good at this thing, guys, you really got to remove emotion from the whole thing. You got to take out the angry, the mad, the upset, the happy, the hype. You got to kind of remove the emotion from investing, and you'll do a lot better long term. Willie Wilo's in the house. Good to have you, man. Thank you so much for hanging out with me. I appreciate you. Let's see here. I'm way behind on the chats, but I'm trying to catch up, guys. Bear with me here. I want to show you exactly the stocks that I have, so you can see my individual portfolio of investments. This is my entire, right? I started off talking about, if you just got here, by the way, hit the thumbs up. I started off talking about I own rental property. We own rental property. We own a primary residence. And then I also talked about the fact that we have our ETFs and our index fund, one index fund and 5 ETFs, 5 or 6 at Vanguard. And then I shifted over to talk real quickly now about Charles Schwab, where I have my individual stocks. All right. Let's see. Kenny from Chicago. Good to have you here, buddy. Let's see. The problem with the dividend ETF is that you feel like you're trading away growth. Excuse me. I don't think I'm trading away growth with a dividend ETF. I'm okay, because any dividends we're putting right back in. We're getting our compound interest. We're getting our compound interest on the stock and on the dividend itself. I don't take dividends out. I know some people, they live off their dividends or pay bills with dividends. I want my dividends in there to be growing, right? Let's see here. Hey, Canny is here. Is it Canny or Canny? Let's see here. VTI and Chill. VTI and Chill, there's nothing wrong with that. VTI is the entire stock market, by the way, if you're on Vanguard. VGT and my Roth, is that good? Nothing wrong. VGT is the Vanguard ETF that has a bucket of stocks, maybe about 80 or 100 stocks that are tech stocks. It's the tech ETF offered by Vanguard, right? Schwab has a tech ETF. Fidelity has a tech ETF. But VGT is the Vanguard tech ETF. Huge returns recently. And that's cool. In the last 5 or 10 years, VGT has done incredible. In terms of the dip today, I'm not sure. Probably a sell-off. We'll see. We're getting close. Anytime you get a little bit of uncertainty in the world, you see some sell-off, right? And as we get closer and closer to the inauguration, there's a little bit of angst going around. Let's see here. Am I concerned with my REIT ETF due to problems with commercial real estate? No, nope. Remember, my REIT ETF only has about 5% of my ETF portfolio is in that REIT ETF. So it's not like, what I try to do with my ETFs and stocks is make sure I'm well diversified. And what that does is it lowers my risk, right? So let's see here. Can we see the individual stock? Yeah, it's coming. Sorry. I'm behind, and I know that was like 2 minutes ago. Bear with me. All right. So let's go ahead and go to that real quick. Let me pull it up here. Give me a second. Bada bang, bap. Stock portfolio. Here we go. All right. So here's my individual stocks that I own. And I'm a real stickler about the fact that, see if I can make it a little bit wider. I look at what sector they're in, because I like to invest in terms of sectors. I look at whether their value or growth, and I look at whether they're cyclical versus non-cyclical, right? So you'll see here, in terms of my consumer staples, food, it's always nice to have a consumer staple up in there, right? I've got a little bit of Chipotle, and this is over at Charles Schwab, by the way. We just started this one, I think, in June of last year, and I think I'm up to I did about 16% better than the S&P 500 in the last 6 months of the year, by the way, since we started this. And so the list of the stocks that are in there, consumer staples pretty much is Chipotle, Kava. If you eat it, Kava. There's Coca-Cola, very, very stable value company. Chipotle and Kava, I look at those more as growth. Then, of course, natural grocers. Why? Because I'm a natural grocers guy. I shop there all the time, or we shop there all the time. Consumer staple, that's what it is. Colgate-Palmolive is one of my consumer staples that are it's a value stock. Now, why Colgate-Palmolive? I've done all the research on all these in terms of numbers, guys. So I'm not going to go through all that stuff. That we'd make this an hour too long, a 2-hour video. So, but you know, if everything goes crazy and we have another pandemic like we had, people are going to still need to buy the products that Colgate-Palmolive offers, right? Because it all, from toothpaste to toothbrush, whatever, it offers all that stuff. And then, of course, Costco, right? I picked up Costco a little late in the year when it was higher than I wanted to have. But again, I'm a long-term investor, so picking these things up at a little higher cost, a little bit of a balloon cost, is not going to hurt me because I'm not looking to trade them anytime soon. In terms of energy, I do have some ExxonMobil and Chevron, two of the big boys, big boys, right? I did pick up a little Waste Management later in the year. But again, we just started this portfolio about 6 or 7 months ago, okay? And then, of course, I picked up Toyota because I'm a Toyota guy, right? It hasn't been doing very well. I didn't pick it up just because I'm a Toyota guy. I looked at some of the numbers and looked at how it was trading and looked at how it was performing and looked at some of its forward numbers. And then Canadian Pacific, I did want some transportation in there as well, and I'm not going to go into all that. But in terms of tech, I do have 5 techs in there, right? I've got NVIDIA, I've got Broadcom for various reasons, Taiwan Semi, Palantir. I picked up Palantir, probably June or July last year. Picked up a bunch of it when it was trading around $30. It's done crazy now. We know that, right? Serve Robotics, pick that up. I'm not 100% fan of Serve Robotics, but I did like some of the numbers and some of the trends I was seeing, so I picked it up. I also have Visa. Now, these two at the bottom here, guys, Brookfield Corporation and Brookfield Assets. By the way, all these down here I don't have. These are sort of on the watch list down here. But I picked up Brookfield Corporation and what they call BAM, Brookfield Asset Management. Now, to explain who and what Brookfield is, I'm going to let you do your own research. But they're pretty much an asset management company around the world. And they pretty much, I'm not going to go into who they are. I'll let you do your own research. But after looking at their numbers and looking at what they do in terms, just a solid buy. And I'll let you go for, I'll let you dig into that if you want to. All right. So watch list, Caterpillar, Procter & Gamble, Philip Morris. Not a big fan of Philip Morris or Hershey or Kraft. Those three might come off the list sometime soon. And I've got some other things on the list. And also in Charles Schwab, in my account, I have a long list of different types of things I'm watching. Now, right now, I got about, 17 individual stocks. Maybe I'm less, maybe 16, 17, 18. Around the 20 to 25 mark is where I'm going to end up stopping in terms of individual stocks. I'm not going to do a lot of trading in and out of these individual stocks. Again, I'm a buy and hold person when it comes to these particular stocks. Let me jump over here and see if you guys got any questions that I haven't seen. Let's see here. Brian, let me know if that individual stock list helps you out here. Vanguard Target Index Fund for Employer Match 401k, individually chosen stocks. Okay, I'm reading that. Guys, Mrs. Moore is right on the money. You gotta hit that thumbs up button for me here. I'm being transparent, trying to show you guys what I got. All I'm asking is that you hit the thumbs up button and check out my channel partner, Mint Mobile. If you're looking for premium wireless services, check out Mint Mobile. There's a link in the description box below. I use Mint Mobile. Pretty much everybody I know that uses Mint Mobile is very, very satisfied with the inexpensive prices and the wonderful customer service that you can get to at any time. So check them out as well. There's some other stuff. There's some free stuff down there in the description box as well. Other videos, etc. Videos where I talk about NVIDIA. I go in detail in Palantir, etc. Let's see. So yeah, thank you for saying hit the like button. Appreciate that, Vanessa. Are REITs just as good and efficient as SCHD, JEPQ type ETFs? I don't like a lot of my portfolio in REITs, okay? I own real estate. I own physical real estate. And so since I own physical real estate, I have a REIT because that's the one sector that I understand more than most sectors. And so I wanted a little bit of exposure to the commercial side of real estate, because the real estate that I own is single family homes. So I wanted a little bit of exposure to commercial real estate through a REIT, but I wanted to get it in an ETF. Now, the past performance of the REIT that I have is not as great as some of the others, and there's been some problems with commercial real estate. We know that. But I wanted to add it to my portfolio because, again, I'm thinking long term. So if you're looking to do a lot of times with REITs, you see their returns are not going to be, you're not going to get 15, 20, 30% returns on a REIT like you would with, say, a VGT, right? You got to understand that when you invest in a REIT. Somebody said VGT is awesome. Yeah, it is. It's been going crazy for the last 3, 4, 5 years. Let's see here. What are my thoughts on bonds? Dapper, I am not one of those people that hates bonds. I'm one of those people that says there's different products for different people depending on where you are in your investment journey. If you're an older person, a 65-year-old person, and you've got $800,000 and you want to protect that money, you don't want to have it because you want to protect it because you're trying to get to the money and you're a little leery about, the stock market, the volatility that may be in the greater stock market, the broader stock market. I see no problem with you moving a portion of that $800,000 over into something a lot less volatile like a bond. Just depends on what bond you're looking at and so forth. That's my opinion on bonds. But if you're 30 years old watching this video and you ain't touching this money really for another 20 years, you probably want to steer clear of bonds for the most part, right? Because bonds are too safe. And that safety will only get you a 1% return. Don't be 45 years old thinking, I need the money in 10 or 15 years. I need to be in all bonds. No, not yet. The rule of thumb is when you're about 5 years from touching the money, then you want to start considering bonds because that's a place to move your money and shift your money where your money is going to be safer in terms of, it's never totally safe. There's always risk. But it's going to be a little less risky when you move it to bonds. So I'm okay with bonds in certain situations. For most people, though, you don't want to have the large majority of your money in bonds because it's just the returns are not there. The risk is so low, the returns are not there, right? The greater the risk, the greater the reward. Let's see here. What's my thoughts on Robinhood, Acorn? Or you mean using those apps to invest? I don't use those apps to invest, right? I like to go with the big boys, right? Right? The interactive brokers, the Charles Schwabs, those things, the Vanguards and so forth. That's just my personal preference, right? Let's see. I'm 48. I want to change from target date to FXAIX. FXAIX's Fidelity is what? Because I don't really have a big account over. Oh, that's the S&P 500 over at Fidelity. You said I want to change to FXAIX. Is that too risky at my age? Not at all. No way it's not too risky, Willie Wilo. Get your money over in FXAIX and start enjoying. Now, I do believe this, guys. Let me say this. The returns we've seen over the S&P 500, I don't think they're going to be as big over the next 5, 10 years. That's my opinion from all that I read. That's just an opinion. I could be totally wrong, right? But this in 2024, 2023 S&P 500 returned about 18, 19%. Last year, 2024, it returned about 23, 24%. We're due for a little bit of a pullback there. Okay. So just so you know, that's my opinion. I believe we're due for, I believe that we've seen some overblownness in stocks. Let's see here. Taiwan, send me. Let's see here. Any more questions? I'm about 5 minutes behind, but I'm trying to get there, guys. Let's see here. No Apple. No Apple. If you look at my portfolio there, guys, in terms of individual stocks, I don't have a lot of the Mag 7 up in there, right? I do have in terms of my stocks, in terms of the stocks, the individual stocks, I do have, I got some NVIDIA, I got some, but that's really the only one I think I have. I don't have Apple, I don't have Meta, I don't have any of the big boys in there like that. Nope. Remember, long term, not really focused on trying to get that quick, 2-3 year big boost. And don't get me wrong, I think I'm going to get what I need out of Palantir and NVIDIA. I really do. But I don't keep a lot of the big Mag 7 in my individual stock portfolio at this time, right? Again, I got some things that I'm watching. Don't get me wrong. And I did have some Microsoft, but I got rid of Microsoft. Let's see here. Boom, boom, boom. So as I look at my overall portfolio, I've just revealed what I own. right? I just one thing I didn't tell you, I didn't really go into. I won't go into that. It's my bond that I have over at ETFs, but um, let's make sure I don't have any more questions here. Okay. Hey, appreciate that. How do you say that name? Monster Energy, Monster Energy Axe. Appreciate that. Appreciate you for, hey, this channel's really blown up in 2024. We've done a lot of great stuff on this channel, man. And I just appreciate you guys. I'm going to be doing more and more lives. Towards the end of last year, I stopped doing so many lives because I was having so many technical difficulties with my my connection setup. So I kind of left them a little bit, but we're going to jump on and do a lot more. But I'm just appreciative of you guys for hanging in with the channel and supporting the channel as well. We've grown a whole lot, man. There's some people in this chat that were with me when I had about 10,000 subscribers, right? Now we're up to, I think we're over 270,000 subscribers and still growing. So I appreciate you guys. And we're still putting out our regular videos as well. So every now and then I want to come on here and talk stocks and investing because I have so many people that want to grow their portfolios, but they're a little squeamish. Man, do I need to get a what do you call it? A financial advisor? What move should I make? And I think, in my opinion, guys, I think most people, when you have under $1 million net worth, most people, you really just need to make a few good moves, right? You don't really need to, I don't believe you need to pay somebody a portion of your growth of your on the way to getting there. I think if you just learn some of this stuff, some of the real basics, you can get there pretty much on your own. But if you have a financial advisor, I'm not downing you or downing your financial advisor. I'm just saying that a lot of folks, if you're a nurse and you learn to be a nurse, you can learn money. If you're a teacher and you learn to be a teacher, you can learn money. If you're a plumber or an auto mechanic and you learn how to do those trades, you have the aptitude to learn money, right? And I always say that they make money so complicated because really it keeps a multi-billion dollar industry going, which is the financial advisor sector or industry. And you really don't need that. That's more for people that have complicated situations or a lot of money that needs to be dealt out and all that good stuff. But for the most part, most of us, we can do this stuff on our own, right? Let's see here. Palantir seems like it may be a promising short. I like Palantir for the long haul, right? I understand what it takes to go from government contracts, which Palantir has done or is in the process of doing, going from government contracts. And I understand also that there's about 300 governments across the world, right? And they have a specialty that Palantir does. They're a leader in what they do, right? Just like NVIDIA is a leader in data centers, right? Broadcom is a leader in supplying the hardware for data centers, right? Palantir is a leader in what they do. And having all that experience with federal government work and now transitioning that experience out to the broader commercial market where everybody can now enjoy some of the services that Palantir offers, sky's the limit for Palantir. And we said that exact same thing 6 months ago when they were trading at $22 a share. We said it, right? We said, I did a video, said, will Palantir be the next NVIDIA? And they were trading at like $23 a share. And something happened crazy. They went off, and next thing you know, boom, now they're trading. What is Palantir trading at today? Let me take a look at it real quick. Palantir's trading at almost $70 a share. If you go back year to date, let's go back 6 months in Palantir. Yeah, just in August, they were trading at $26 per share. Imagine if you had $40,000 in Palantir back in August. Now you got $120,000, right? Because it's triple. So this is my portfolio. I'm just revealing my entire portfolio of investments. 2025 could see some changes. Some of those changes could be some additions to the stock portfolio. So listen, I'm not going to hold you guys. I appreciate you being here. I don't see any more questions. If you got a question, you better get it in real quick because I don't mind answering them. Don't forget, check out the stuff in the description box below, right? Do me that favor. We've got another video coming out tomorrow. Video coming out tomorrow is talking about, we're talking about 7 career tracks that are going to stand the test of time against AI. 7 careers that AI can't touch no matter what. So please take a look at that video when it comes out. Somebody said, what do I think about bonds? I answered it earlier. I'm okay with bonds, especially if you're older and you're looking to get to the money in a short 5-year span, and you don't want to have your $1 million sitting all in stocks for the great crash that might come in 2027. Who knows? I don't know. You want to move some of that over into bonds because you plan on tapping that money. I'm okay with that. But again, if you're 45 years old, please don't have 90% of your money going towards bonds. That would be a mistake in my opinion. What sectors do I want to add to? If I look at my sectors, guys, and I know I always say I'm about to go and I don't go right then, but that's okay. I just like to help out as much as possible. All right. So when I look at my sectors right here, the sectors that I want to really, I want to make sure I'm in on is my value stocks. Okay. I got my growth. I'm in tech. That's growth. I got Brookfield. That's growth. I'm in some growth, but I like value. Why? Let me just explain something here. The goal with my Schwab account and these individual stocks, we want to push this thing to about $100,000 over the course of the next 3 years. We're trying to push this thing to $100,000 in 3 years. You're saying, well, you got to have some growth in there like that. Well, I'm going to hold on to it. This is a long-term portfolio, but I want to see some quicker growth. That's why I'm kind of heavy in tech. If you look at the allocation of these right now, this whole portfolio is about 50% tech in terms of the weight of the portfolio. And I know I got a bunch of stocks, but the weight is like 50% tech. So I've got, a bunch of shares of NVIDIA, a bunch of shares of Palantir, and it's heavy in tech. We're about 50% tech right here. That's where I'm going to get some of my growth from, because I'm going to be a little bit heavier in those growth areas as opposed to being heavier in Coca-Cola and Toyota and Costco. I'm not going to be heavier in those. So that's kind of how the allocation works with this. And I don't think I revealed the allocation, but it's over here. No, it's not over here. It's in my other spreadsheet. But we're heavy tech. So NVIDIA is like 30% of the weight, 25% of the weight. Palantir is like, 15% of the weight of all these individual stocks. I hope that makes sense. I really didn't explain that earlier, but I'm glad that question came about so I could explain that. Let's see here. Somebody said, what would you invest in today with 1,500 stocks wise? Depending on how old you are, depending on what the rest of your situation looks like. Listen, I look at the big picture when I try to help people with their money. So when you say take $1,500, I might take $1,500 and invest it in 3 or 4 different stocks as opposed to putting all in one. Depending on your situation, what other stuff do you have? That's the best way to answer that question. I could give you a quick answer and say, put all that money in Taiwan Semi, drop all that money in Super Micro. But that's just a fake answer, because the real answer depends on what you want, how old you are, when do you want to get to the money, what's your risk tolerance, what's your philosophy. That's why you got to figure all that stuff out first. And most people, they skip right over that and start plunging money into the stock market. But you got to figure all that stuff out first. So those type of questions are really tough to answer in an appropriate way. Walmart is Walmart is a solid company. I think it's going to be around for a while. What about Tesla? I've never been a Tesla guy. Okay. I've never been a Tesla person. And I'm the type of person that I have to believe in the company, understand and believe what the company, part of my strategy is making sure I understand how they make money. And I sort of agree with their overall personal philosophy as a company. For example, nowhere in my stock portfolio or my ETF portfolio do you see an abundance of pharmaceuticals. You don't see an abundance of healthcare and pharmaceuticals, because I don't like the pharmaceutical industry. Why don't I like the pharmaceutical industry? I don't like there's something that rubs me wrong about the pharmaceutical industry, so I don't invest in pharmaceutical stocks. So I'm a person that I look at my morals and values to an extent when I'm investing. And I've never been a Tesla person. I don't like their vehicles. I don't like the style of the trucks. I don't like the volatility of the company. I'm not a Tesla guy, so I don't invest in Tesla stocks. Now, you got to figure out what. Now, you may not even think about that. Some people just say, I just want to invest and make money. I don't care if anything. That's cool. But in terms of me, I got to stay with what works for me, right? So I'm not a Tesla guy. I don't invest in Tesla. And I've watched it do this right here up and down for the last couple of years. I'm saying, well, that's probably one of the reasons I don't like it. Somebody says, I have 23K in an old 401k. Should I transfer into a Roth? Can you transfer it? Check with your administrator. If you transfer it, you got to pay taxes on it. You got to understand those rules. Make sure you know all the rules before you do it. Check with both administrators, the old administrator, the old 401k, and the new folks. Is it a transfer? Is it going to be a rollover? There's a difference, right? So do your due diligence, and you got to make that decision. Understand you may have to pay taxes as well. Let's see here. Make sure I don't miss anything. I'm probably missing a bunch of them. I have boom, boom, boom. Just got that one out the way. So listen, guys, I'm going to let you go. I appreciate you more than you know. I just revealed my entire stock portfolio of investments. We're going to be back on here probably next week or so and do another one, guys. I appreciate you. I appreciate you. I appreciate you. Thank you for being here, guys. If you got a question, drop it in the comments section. Let me know in the comments section, and I try to get to those answers for you guys. Listen, as I always say, the absolute best person who's going to take care of the old you is the young you. Guys, take good care of yourself and take care of other people. Until the next video, peace.